Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. There have been and still are two main bullish Andrews pitchforks that you can see working here on my daily chart. The original late March to early July action and the more recent early July to mid-September one. Both these are crucial in the running of this market and to the overall bullish incentive. In the original late March early July pitchfork, the middle tine, currently at 280 even, had shown back in August how good a resistance it was, and in recent days how good a support it is. Then in mid-September, the lower tine, currently 282.5, of the newer early July to mid-September pitchfork started taking on some of the heavy lifting of the bullish support by commencing and showing the more recent and more acute bullish angle of attack. This it is still doing magnificently. Anyway, what we saw was this lower tine raising the market such that last week prices moved up over the original older middle tine. The first time that has happened since mid-August. As you can see, this market, like many of the other grain markets, was getting squished between these two tines in recent weeks. And such a move higher, much like toothpaste coming out of a tube, was what eventually happened. This week the market reached up and managed to achieve target X in the 288.5 area. This was the target for the July to September bullish halfway hesitation pattern. Originally it was a huge ask to think about, and originally it was up off the top of the daily chart when I suggested it. But with these bullish pitchforks it became an easy target to achieve. What has been interesting was how once the market achieved and the topside target X, the prices have come off with two consecutive bearish patterns, a bearish engulfing pattern and a 2-day bearish matching pattern. Now I'm not suggesting that this is the top, not yet anyway. It's just interesting that prices came up after reaching target X. It will be interesting also to see what happens next. I will now finish up with something I've repeated again and again. Please continue to keep this in mind. The bullish March to July Andrews pitchfork is still very much intact, and until that is broken, redesigned or reassigned, then it will rule the overall bullish incentive. Plus, this is all taking place in the shadow of July's monthly key reversal up. London UK feed wheat. Okay, so it looks like we're going back to using a line chart for most of the action here. That's okay. It sometimes helps with the patterns. Anyway, 7 weeks ago prices stabilized just under the then short medium moving average, currently at 199.45, and amid the undergrowth of lesser Fibonacci levels at 183.45, 182.20 and 181.60. Then prices started to rise again, once again. Now the rise was somewhat spectacular and uncalled for as the market moving up made 3 gaps within 2 weeks and yet still continued to move higher. Up through the then slowly declining medium moving average, currently 191.60, and 5 weeks ago up over the long moving average once again, properly this time. We had a little hesitation before a strong kick upwards pushed prices up towards testing the old March 2013 high at 205.05. Now early 3 weeks ago, the market launched an attack higher that finally cracked that March 2013 high. Now I spoke 5 weeks ago thus, and I quote, "All this action has allowed me to draw a July to September bullish Andrews pitchfork, and it is the lower tine of this pitchfork, currently at 214.20, that has recently shown the bullish angle of attack. Thus, the middle tine above, that's currently at 230.70, is the main rising bullish resistance beyond the March 2013 high. It is, as I've said elsewhere, until this bullish Andrews pitchfork is broken, changed to a bullish shift pitchfork, or reassigned and retired into something else, then it will drive the bullish incentive higher in this market." End of quote. Thus we come to last week when we saw a fresh, more acute higher, even a gapping move higher, such that last Wednesday prices rose up and reached target X. Now I had previously detailed target X 3 weeks ago, and I quote, One final thing to add, and I've expressed this last week here and elsewhere in some of the other grain markets which have shown a similar aptitude, is to look at the July to date action as a bullish halfway hesitation pattern. With this in mind, I had previously placed a prospective target X in the 213.15 area. This is not as insurmountable a target here as elsewhere, but let's not kid ourselves, it is still a big ask, and I've not altered it a bit from last week. Well, this big ask became a big reality. However, prices did not stabilize there. Instead, early this week we saw prices moving even higher over the old horn top that had defined the May this year high and the 2013 high even at 215 even. However, this is when the move up showed the first cracks of perhaps being unsustainable. Prices turned down Tuesday, such that today we're back at the same old target X, 213.15, but this time from above, and more importantly, closing below the lower tine of the key July to September bullish Andrews pitchfork. The next few days will be crucial because though we have closed below this lower tine in the past, and in recent days even, each time we've done that, prices have rebounded back higher. This time with the achievement of target X, it may be a different game. I look forward to seeing the market action next week. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.